you have a 401k at your employer or you contribute to your IRA, P.S. you should have a Roth IRA, you should definitely be maxing those out today.
Isn't there a way you can use your retirement account to invest in real estate?
Yeah, absolutely. So what happens for a lot of people is when they change jobs, they end up with these orphan 401ks, and quite often they roll them into an IRA. When you don't have a company IRA, or you're done with your company's IRA or 401k, you can do what's called a self-directed IRA or a self-directed 401k. And you go to a trustee, and that trustee becomes your custodian. And then that allows you the power to make decisions with your own money. You can buy stocks. You can buy mutual funds. You could buy a piece of real estate like you just said. You could loan the money out. One of the things I want our listeners to understand, about a third of what we do is private capital. And that private capital comes from individuals out of their retirement accounts, because they have money rolling out of CDs, they have self-directed, and they loan us the money for construction projects, they loan us the money for fixed rate debt, they loan us the money to go flip a home, and we pay them instead of paying like JP Morgan.
And then what's the benefits of having a self-directed when you invest into real estate through it?
Having a self-directed gives you the power and the control, and there's not someone with a large asset management fee pulling your hard-earned retirement money, number one. Number two, hiding it behind some type of bundle. So a lot of these things are very opaque. If you're in control of it with your self-directed and you decide to buy the S&P 500 and you decide to loan some capital over here, you're in direct control of those investments, and you're also making the full return with no middlemen. In real estate specifically, if you bought that waterfront home and you paid $140,000, and then all of a sudden 30 years later, when it's time to retire, 40 years later, and it's worth 1.4, and you go to sell it, you now have all that growth tax-free. Conversely, if you're married in the United States, you're only going to get a $500,000 deduction if you owner-occupied that. And if you didn't owner-occupy that, you're going to pay about 20% on the gain over that whole property. In this case, hundreds of thousands of dollars, hundreds of thousands. Self-directed IRAs are one of the absolute best, and self-directed 401ks, mechanisms for people to control their own wealth building and to get better returns without middlemen.